In Markham, Ontario, we have Chuck. Good evening, sir.
Hi. WestJet has pulled back the past 2-3 days. I'm wondering if this is a good entry point.
Right. So, Chuck, we are shareholders in both WestJet and Air Canada. Both have cost us a little bit of money in the last few days, as both of them have pulled back. I think that there is some concern about the higher end of the market and whether people are spending as much money. Certainly there was for Air Canada. I think that they are both sitting on support here from a technical perspective, and what we're looking to see is how well they hold over the next few days given this pullback. We've seen a lot of companies report earnings, see the stocks pull back after the earnings, but then hold and then go higher. We're watching both of these very, very closely. So I think it's still in a long-term uptrend. I do think that there is risk that it's come a long way. So we're going to watch this one very closely. We're doing some more work on it. I'm not sure I would go and put a full position on. I might start with a partial position, and then if you were able to see it hold from a price perspective and move higher, look at adding on strength.
Where is your sell stop on this stock?
Well, I can't tell you exactly where the stop is.
Roughly.
It's not far from it.
Okay, but you've obviously done pretty well with this one.
Yeah, no, we've made very good money in this and in Air Canada. Mm-hmm. I'd never like to give some back, but things don't go straight up. Okay,
Paul in Red Deer, Alberta. Hi, Paul.
Hi, thanks very much, Mark.
You're welcome.
I was going to ask you, David, please, about Alta Gas. I know it's been recommended a number of times by various guests over the last few months, and I've watched it climb from the low 30s to the high 30s. Not a holder at this point. Would you still consider it a buy at this point for a 1 or 2 or 3 year hold? And
right.
What's your thoughts about the total growth return of the stock with the 4% dividend over the next year or two? Thanks so much.
Thank you, Paul.
So, Paul, a lot of really good questions in there. This is one that we've recommended a few times as a top pick. This is the biggest single theme that we're invested in, energy infrastructure, and Alta Gas is a very strong component of that. I think we have a very large investment there. I think this industry is one that will continue to be revalued. The biggest risk, I think, that you have is there's a lot of analysts who want to look at the last 10 years and say they're expensive relative to the last 10 years, but the opportunity that these companies have right now is very different, and the growth rates that they're seeing are very different. Alta Gas is unique in that many of the contracts it has are very long life to supply energy. In many cases, they have indexes to inflation, so their contract pricing will go up if there is inflation. In the case of Alta Gas, they have some big new projects that they're building that come on over the next couple of years, which will add significantly to their cash flow. And so while their payout ratio is quite high right now, it will come back into line as new projects come on over the next 2 years. And if your window is 3 years, I think you get your 4% yield, and you probably get 7 to 10% dividend growth out over the next 3-4 years. I think this is one that's solidly in the wheelhouse of what a broad number of investors are looking for.
And what's the main way that you value this one, David? Price to cash flow, price to earnings?
Well, we look at the payout that it's making from the funds from operations, and we look at the growth rate of the cash flow going forward. And I think that what you should expect is that the companies that have an ability to grow what they're paying you are going to be very attractive in a world where income is scarce and hard to come by.
All-time high for Alta Gas today. Here's Barry across the country in Vancouver. Go ahead, sir. Hi, Barry.
The major banks, in particular CIBC, they had popped for a year ago since the European crisis, but they've been languishing for the last 3-4 months. PE ratio at about 10 is pretty respectable, conservative, and 4% payout dividend. But they're not doing very much in the last 3 to 4 months. Any thoughts?
Yeah, Barry, I think that the problem here is it's not a quality problem. I think that the concern is that there is a lot of international money that's been in Canada that's been working its way out of Canada in favor of other markets. I think when you look at how the Brazilian market's been doing, how the Chinese market's been doing, how the Canadian market's been doing, more resource-driven markets, they've been underperforming significantly. Canada barely positive on the year, while the S&P is up 12%. So I think that fund flows have been moving away from Canada, and I think that many investors have been moving money from Canadian banks who are seeing lower growth, and there's potential risks in the real estate market, to some of the U.S. financial services companies, where maybe there's a little bit more upside. The average big bank in the U.S. is paying 27% of its earnings out. Historical was 40 to 50. They've been held back by the Fed as they've been rebuilding their balance sheets. And now that they have rebuilt them, there are many that will see an acceleration of dividend growth, which is less likely in the Canadian market. So I think certainly the dividends are safe. You're going to do just fine. You may just have slightly lower dividend growth, and we prefer some of the U.S. financials to the Canadian financials.
All right. Can you give us one U.S. name?
Sure. I think you could look at Citigroup or a Wells Fargo or JP Morgan. But on top of that, I think you have to be looking at the asset managers as opposed to just the banks. Because as markets are getting a little better, management fees are going higher. Those that have had good performance are garnering new inflows of capital and equity funds. So Investco, even CI here in Canada, good strong dividend, good strong asset growth, good performance. I think that's a good combination of maybe better total return.
CI is very close to $30. In fact, it might have hit it yesterday. Yeah, it looks like it got to 30, maybe intraday. We're going to talk Rogers now, sugar that is. We have Wade in Courtney, BC. Hi, Wade.
Hi. Good afternoon, gentlemen. Just like your take on Rogers Sugar for a long-term hold. Thanks.
Okay, thanks, Wade.
Okay. So in the case of Rogers Sugar, we know that sugar prices in general have been particularly weak. Rogers is a processor. Technically, the stock is looking a little bit weak. Revenue growth has been virtually non-existent. I'd be a little bit careful. I really am staying away from anything commodity-driven. There's a 6% yield here, so you do have some support. I just think there might be better places ultimately to see dividend growth going forward.
So thumbs down on Rogers Sugar. We will come right back after this break. We're going to take a look at David's previous picks, his past picks, going back almost exactly a year, minus a week, to May 17th of 2012. We'll take a look at those right after this.